And good afternoon to those on the East Coast. Good morning still to those of us here on the West Coast. My name is Michael Filighera. I am with LogicalSignals.com and also TradersHelpingTraders.com. And I am pleased to be presenting my portion for this Synergy event on market psychology. And the title of what I'm going to talk about is sensations, emotions, and thoughts and trading. And when we are thinking about each one of those, the important thing that I want to really bring out today and discuss is how each one of those factors can break your focus, break your concentration, basically ruin your day. And so I want to just kind of say how when we're determining that we're going to go in and trade, we've done our homework in terms of we've looked at the market, we've done some analysis, we have an idea of what we think may or may not happen, and we've picked our points, et cetera, so we're all set. And we decide to jump in and we're going to start to trade. And I am just going to go lead by example here and say, okay, we decide that this is going to be a good trade, and I decide I'm going to sell it. And of course, I don't get in. So you try to decide, am I going to chase it or whatever? But anyway, so I decide that I'm going to get into this trade. Now I'm going to wait. And so what I think each one of us needs to do is we try to determine, right? We decided we're going to get into this trade because we had an idea, okay, they're going to start taking it lower. They've taken it lower this morning, blah, blah, blah. So what I want people to do or figure that people can do is you try to check in with yourself constantly. So let me not get ahead of myself. So I'm going to close that trade and go back to what I do each morning prior to actually beginning to trade is I take a look at my own sensations, emotions, and thoughts before I start to trade. And with another friend who actually is presenting tomorrow, Rich Friesen, we worked out in a group and came up with what we call the SET score. And that has developed into greater things through Rich, and hopefully he'll be talking about that tomorrow. But in any case, for today, I'm going to focus on the SET, the sensations, the emotions, and the thoughts. These are areas, like I just said, that can truly derail your trading and can do it very quickly and almost unbeknownst to us. So what I do every morning is I kind of take a look. First thing I look at, my sensations. What is going on in my body? What am I feeling? And so sensations can be, for me this morning, I woke up, I had a headache. I have arthritis in my neck, and it was kind of bothering me. That's a sensation. That's my body sending me a signal of it hurts. So I need to pay attention to that. How severe is it? How much does it take me away from what I'm viewing and what I need to look at? And I give that a score. And it could be from -5 to 0 to +5. If I'm feeling energetic and I'm feeling great and my moods are great and I had a great evening last night, I had a great night's sleep, and you're just all set and raring to go, you might give yourself a 5. Me, I have a headache, I got a little muscle ache, a little pain in the neck, et cetera, I'm a little uncomfortable, and I'm going to give myself a -3. So, and then I move on, and I move to the next one, and the next ones are emotions. And the emotions are also, they're very important. And again, you're not sharing this with anybody. So it's truly to our own benefit to be honest when we're doing these evaluations. And why I say that is because you could say, oh no, I'm trading because that's what I want to do today. And then wonder why you get into a bad position and you don't take it off and things just kind of start to derail. So having that understanding before you go in, that you get to make a choice. So let's walk through this exercise one little bit more. I don't want to get ahead of myself. So we're now talking about emotions. And what could that be? Again, I kind of woke up, I'm in pain. Pain makes me a little crabby. So I got to take a notice there where my emotions are. And, or possibly you've had an argument with your significant other, with your spouse that morning, the night before, maybe the day before prior at work, you kind of got into a dispute with one of your coworkers, or even got into a conversation which wasn't pleasant with your supervisor or your superiors. And so that carries over. It's an emotion, and it's still within you, and it's still brewing, and it's still producing additional reactive emotions. So you give that a score. And again, because of the pain, what the emotion it kind of puts out in me is I don't have as much patience as I would have, because I think when I'm in pain, my patience level kind of goes out the window. I don't want to be bothered. I don't, I get triggered more easily to move myself into an angry position. So I score that, and I'm going to score that at -2. And so the last one are the thoughts. And thoughts about the market, thoughts about your trading, thoughts about your account, thoughts about your home, your relationships. Just generalize what your thoughts are. More importantly, because of what we're going to get ourselves into and start to do is to trade. So more importantly, it's your thoughts on the market. Are you coming in preconceived and thinking like, I'm bullish on the market, I'm just going to be buying this thing? And that may or may not be the correct option. Or, oh boy, I'm just all into this, Snap came out and that's really bad news. It's really pushing down Facebook and Google and all these stocks. I'm a seller. I'm just a straight seller today. And that affects, and you're making your choice before you even got a signal of what you're going to do. So these thoughts, you also put a score on. And then you add the 3 together and divide by 3. Now you're getting your SET score. Now, what's the importance of that SET score? Because if you're coming in and you're negative, you then get an opportunity to choose to whether you want to trade. Do I want to trade in my live account? Do I want to trade in a SIM account? How do I want to trade today that's going to be reflective and give me space around where my emotions, my thoughts, and my sensations are coming from right now? Because we know that they can switch and they can change, because we're human and we've done this so many times. Our emotions and our thoughts and our sensations can change. So I'm making the choice that I am going to trade today. So now I come in, the bell rings, now we're going to trade. So we each have our signals, our system of how and what we're going to trade and how we're going to trade it. Me personally, I am a day trader. I'm a day trader in the futures market, and my future of choice is the NASDAQ 100. It has extreme volatility. It moves quickly in both directions. And if I can follow the market and I can trade well, it usually can turn into a very profitable day. So here we are, we're sitting and we're trying to determine that we want to trade, and we're looking for our signal. And we're looking at our signal basically telling us, well, we're getting up here, maybe I'm going to try to buy it. So I step in and I buy it. Okay, so now you need to pay attention. Wow, okay, I just bought this, and look at it, it was already down 140. Oh, what's going on? Now you need to be aware of what sensations have just come up, all right? Because it's going to affect your trade. So the objective, of course, is that you want to stay focused. You want to have a trade plan, so you know why you're getting in, what your expectation on the trade is, and where you will exit when the trade becomes invalid. So right now I've gotten into this trade because I'm thinking, well, maybe it can get up as high as 760, maybe even get up to 770, which is all the way up here at the value area high. Where I would get out of the trade is if it breaks below this 1 minute 8 moving average. So far, I'm not really making any money right now. But if I didn't have any of that in line, your thoughts and your emotions and everything start to drift into, okay, do I get out of this? Do I stay in this thing? Okay, I'm down 150 bucks in this trade. Oh, do I get out? Do I get in? And then now you're getting nervous. Now you're getting a little excited. What do I got to do? And okay, come on. You can do it. You can do it. And it goes up a little bit and you quickly exit your trade. You're like, okay, I'm going to get out. And boom, you're out. You made money. Now, let's just see, because prior, if you have a plan and you've got a thought on where this is going to come, you don't jump out too early. But you will jump out too early if your emotions, your sensations, and your thoughts will jump in and take over for you. Now, granted, today and right now, the market is not necessarily whipping itself around. So it makes it a little bit easier. This morning, we were kind of whipping around a little bit. And normally in the NASDAQ, it will do that. So what I try to do is pay attention to what affects my trading. What I know from the past affects my trading. So from all of that, we can develop a set of rules. And they're your trade rules, not anybody else's. They're your trade rules. And then if I'm taking my emotional tests in the morning and I'm seeing where I am in terms of my own physical sensations, my emotions, and my thoughts, and I can put some numbers around that, now I've got an idea of where I'm sitting with all of that, so I can keep an eye on things for changes. Because I'll tell you something else. It's like if you happen to get into a trade and it really turns into a bad losing trade, which we're not getting at the moment, because I wish I could set up the scenario to show it in real time, because that's really more effective. We don't trade in a frozen market. We don't trade in a market that's not moving. We trade in a market that is open and trading. And each one of those can produce an emotion and a thought and a sensation. And so how do we want to deal with those? Again, we're not really flipping and flying at the moment. So it's a little bit more difficult to demonstrate how they come up. But for example, you're looking for this to go down. So I'm going to say, I'm going to sell it. And okay, it's let me in. Now, what's my goal on the trade? I think we drop down to the 1 minute 20. So this is actually where I would look to get out, down here. Well, where's my stop? Well, I have a lot of confidence in it, so I think my stop might be at 55.75 or 56. If it moves above that, then we got a shot that we're going to come back up here. But now I'm going to show you how I keep tabs on my emotion, but I also can work the trade. If you'll notice, I really don't have a stop in. My stop to exit the trade, if I'm wrong, is more mental than it is physical. But if you're the type of person that you will not honor a stop, then you need to actually put it in. Because if you don't, you get up there, you're like, I don't know, should I get out? I don't know. Maybe the market goes back down. Maybe the market goes in my way, et cetera, and now it's up again, maybe another $5 or $6. And you're like, okay, now I'm down on the trade. Oh, okay, here we go. See, we're watching. See what happens? Now, I just decided, well, look, I don't know. I'm not going to get out there. It went up a touch it, now they're coming back down. So you decide you're not going to get out. So we're just going to see, what does that produce? Am I now like, oh man, do I get out? Do I stay in? What do I do? Okay, wow, come on now. Come on, market, work for me. Come on, let's do this trade. Now you're having the conversation. Now you're down even more. And you're like, wow, look, this is over. You're overbought. You're even on my little chart, you're overbought. Oh, come on. Now I'm down 400. Now I'm down 500. Now I'm down 600. What do you want to do? Oh, you know what? I got to add another contract. Because you're still hoping that this is going to turn. Now it's gotten up to this value area high, and it should turn from there. For sure, it should turn. Look, we're really kind of oversold. I mean, excuse me, overbought, et cetera, et cetera, et cetera. Now you're holding on to this trade. And now you're looking, going like, oh my God, I'm down over $1,000. Oh, come on. What are you doing, market? And maybe you have a limitation on your account in general, where your account shuts off. Maybe you're trying to work what is commonly, you're working to get additional funding from different available firms, such as Lilu or Top Step Trader or One Up Trader or Apex Trader. And so you've got a limit on what you can lose in any given trade. And maybe you just hit it. Now, if not, and you're trading your own money, you're like, oh man, I just got to keep averaging up because I just don't believe in this upside. You add another contract. Now you're working 3 contracts. So in essence, what you're really doing is you're working this for $15 a tick, right? Because you got to understand the product that you're trading. It's $5 a tick, $20 a point per contract. So right now I'm working it for $15 a tick, $60 for each dollar this thing moves. And we know, just from we just watched, the NASDAQ can move $10, $15, $20 pretty easily at a real easy clip. But now I've raised my prices. So, okay, I'm going to be a little bit more relaxed. Okay. But your hand is on the mouse. I was like, boy, I just need it below 777. Come on, I just need to get it below there. And if it doesn't, and it goes up, where are you going to get out? Because now you're nervous. Now we're wondering, oh man, did I make a mistake? Oh, come on, I can't take this hit today. I just don't want to start my day off like this. Come on, market. And trust me, I don't know if you've had these conversations, but this is not unusual. Traders, this is what we go through. Then you start to breathe a sigh of relief. Now, please just come on down. Please just come on down. Now, mind you, while this is all going on, you have now lost touch with your indicators, with your 5-minute chart, with your 2-minute chart, which might be telling you we still have room to the upside. But you just got excited because, wow, oh, good. Okay, come on, make that money for me. Come on, make that money for me. And so now you're going to have to decide where you're going to get in, where you're going to get out, right? So now, where do I start taking this off? Well, I don't know. I just let it go $1,000, $1,500 against me. Oh, I want to make that money now. All right, so now you're going to sit and you're going to wait. So you're setting yourself up for disaster, in my opinion, on both sides. And here's why. Because you in the process of not honoring your own stop level, you've produced a situation where you've taken yourself out of your mindset, you've taken yourself out of your focus, and now you're just actually trading emotionally. You're not trading technically, you're not trading according to your rules, you're just trading emotionally. And I personally don't feel that that is the best way to trade. Because now you saw that it came down, I was plus 700. Now I'm almost back to break even. Come on, what are you doing here? What are you doing here? And my thought process, and I'm telling you, I'm following the trade. I'm thinking to myself, I don't think it goes down. I think it goes back up. And we go and put in a new high above 11,807. Let's see. Because now I'm going to hold on to this because in my mind, I'm thinking, okay, I think it comes down to this 20. So now you're starting to walk back in and you're getting back into your groove and you're like, okay, we got this. We got this. Okay, I'm all right. I'm okay. And now we're just going to see about how this goes in. And it's not what, and again, what I'm doing now, I'm cheerleading the trade because I want to make that $1,500. And now you're getting excited that, oh, good, going my way, going my way, going my way. Do we have a stop in? Are we starting to take this off? No, but I'll tell you, I will. But let's see if it'll do it, because I'm going to see if this comes down into this zone, and that should start to give me that $1,500. So I'll put one. Now you're like, okay, I'll get out of one down here. It's got to come down there. It's got to come down there. So that type of a statement, that is an emotional cheer. It's got to. No, actually it doesn't. And so now you're tying yourself emotionally to your trade. And so if you get a negative result out of this, it's really going to just start to beat you up. So what I'm trying to just demonstrate here is how we tend to walk ourselves into our own situations and how we can try to avoid them. Fortunately, I picked the right side and I've got a good trade going. Well, let's see if it gets me out. But now, am I smart enough to put a stop in? I haven't yet. The rational trader would be like, okay, I need to start protecting my profit. So I'm going to get out of one right there. Oh, I already put it in. Oops. See, now I made my own mistake. And here we go. And now I'm short because I'm not paying attention. So I'm just going to close all that. Now, that trade worked out. And so that emotion subsides. So instead of really focusing on, gee, I broke my rules, I added to a losing trade, and I didn't honor my level to where I would stop the trade out. Regardless of the trade actually did turn and move in your favor. You need to stick with the fact I broke my rules. So as you develop your rules and your goal is to be a successful trader, you really must adhere to those rules. When we break our own rules, it's a recipe for disaster. I have helped and coached many people, and I constantly am reviewing with them about, okay, what happened today? Well, I broke my rules, and what happened? And I blew up my account. Okay. And how does that make you feel? I'm angry. I'm angry. Why? Well, because I broke my rules. I can't get a hold of it. So as we step through this minefield called trading, we can start to put together the thought process of what creates this situation in me that I keep falling into. There are folks, and I don't say that I'm immune to it because I'm not, that tend to fall into the same pattern, tend to break their rules. They know their rules work because when they follow them, they have a string of successful days. And they're able to meet their goals for that day. And then there'll be the one day where either they fall prey to their own negativity, their own, their own breaking of rules, and then try to trade out of it. Or maybe you take a hit. Now you're going to try to double down. I'm going to make that money back. Dang it, I'm just going to do it. And it doesn't work. And you wonder why. This is all a process, folks. This is how the psychology of trading meets actual trading. When you are trading your own money, when you are trading your own account, your emotions will come out when you don't want them to. And I chuckle because this is the voice of experience coming. You could be so set and you've done your SET score and you're all ready and you're in. And then all of a sudden, before you know it, you broke a rule, your rule, and now you're in trouble. And now the trade's not going with you. It's going against you. And you're trying to determine how far can this go? What should happen? And of course, because you're negative and your best hope and wish is that it's going to come back for you, that's what you're going to be cheering. It's going to come back. It's going to go back. The market, yeah, it's not going to go down any further. It's not, whatever the situation is, you're going to talk against it. Because what happened? You broke your rule, you broke your mindset, you broke your focus. That opens it up for all this other exterior, what I call noise, to come in. So what I want to kind of shift and go into is how do we develop that mindset? How do we get there and not allow exterior noise to come in and disrupt? Now, exterior noise can be coming from, and you can't see me because I'm not on camera, but I'm pointing to my ears. It can come from our own minds. We think we are our own best friend, but we're also at times our own worst enemy. There are pieces of us that seem to want to sabotage our best efforts. And so this is where the psychology of trade comes in again, because many of those negative, self-sabotaging behaviors are deep-rooted and go back way before we ever sat down to trade. So they're attached to something that gets triggered. And then that's that exterior noise that's coming from within inside our own heads. So what I attempt to do and what I attempt to help others do is to form, and again, you can't see me, but I'm drawing a circular parameter around my head. And it really should be around me, but it's really around my head. Those of you that may have been in my trade rooms, or you listen or watch my videos that I do each day, you have heard me say many, many times, I am not really? You guys can't hear me? Wow. Okay. Well, let me check something. Hello, 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 hello. Mine is working. Oh, good. You can. Okay. Thank you. Thank you all.
Yeah, you're coming through fine for me.
But TD, I guess, is saying there's no sound. So, thank you. So maybe, David, maybe just check in with them. Anyway, so see what happens? I had to go do that. It broke my focus on what I was talking about. So when we're putting into that mindset, that's where we want to get. How do we get there? What do we do? Well, first of all, you do that SET score. You check in with your own self each morning. And I'll tell you what, if you get derailed right off the bat, you close that trade, you step aside, and you do another SET score. You check in with yourself again. And I'm telling you, when you're beginning this whole process of doing this on a regular basis, there are times when you might want to do it 5 times in the first 20 minutes. Because if you're triggered and you're pulled and you're pushed, it's time to step back, reassess, and then move forward. So going into setting that mindset. The mindset is basically, do we have the correct mindset to come in here and day trade? Now, again, I'm not trying to assume that everybody that's here with us today are day traders. But I would say, because we're really talking about futures, that most of us are. Or we're kind of swing traders, but day swing trading. And maybe you do carry position overnight, and that's all great too. So how do we kind of get this mindset together? Well, when we're looking at the market, you come in, you look in the morning, you see what they've done overnight, you see what they're doing this far in the morning, and you've kind of got your facts and your stuff of what you might be expecting for today. You've listened to someone's analysis and what they might believe is going to be happening for today. You've got your moving averages lined up if you use them. You've got your Bollinger Bands. You see where they're going to be. You've picked your points to where support and resistance could be. Maybe you're using Fibonacci. Maybe you're also tying in Elliott Wave. So you've got all your indicators and your tools in alignment, and you're set for what you believe the market's going to do for you today. And that's great. Then you begin. And if that first trade's great, okay, you're feeling good. But you don't step in, again, don't step in to take a trade based on what somebody else is saying, based on somebody else's rules, because you need to have your own rules. You need to set up your own trade path. And by doing that, you're the one in control. You're the one that's making the decision. Yep, this fits my rules. My trade setup was as follows. Again, okay, let's just put this into real time. We're coming down. Right now, this is that purple line. That's the 200 moving average on a 1 minute chart. It's kind of flat. I'd be looking for support right there. This green color right underneath it, that's a supply zone. So there are buyers already lined up right in there. So you can see the sellers, and what's happening, it's coming down and it's kind of cruising against the bottom Bollinger Band that I use on my 1 minute chart. And this is only a one standard deviation. Oh, actually, this might be two. So, but now, okay, we just broke that. Now I'm looking, see? And I want to just make this bigger. That's what I'm looking. Notice how it came down, touched it, and popped. Those are algorithms and day traders, because that's exactly what they expect. They study price action. Price action tells you, okay, if it goes, it might be a scalpable. It's scalpable. But now it's kind of gone through, and I'm going to see it's going back above. Let's see if it comes back down. Let's see. I think we should sell it. And you go in, you hit it, and now you're in. What's my goal? Well, my goal is the bottom of this little range here. Okay, so your goal is that you're going to look that it can come down to 880. I'm going to call it 88. So I might go in just above, and I'm just going to see. I'm going to put my order right there. Accidentally, I sold 3, and it's because I wasn't paying attention. So again, here we are. I was using 3 before. I didn't put it back to 1. So now I'm short 3. I didn't want to be short 3. I only want to be short 1. So here's your choice. You get that quickly down. You take 1, you take 2. Now I'm down to that 1. So you better change that cover. And now I'll go back right here. And now I'm just going to put 1 there. Now we can monitor our trade. Now you're back into comfort. Okay. Where will you get out of the trade because it's become invalid? And that would be a break above 1675. So I actually will give it all the way to the 1 minute 50, because the 8's pointing pretty strongly down. So I think a break there will produce a break there. So I'm going to put my stop at 25. Now, if it comes down, I've got my buy order, I've got my sell order, I'm watching, it's all following along, and you're now playing by your rules. So made a couple of mistakes, corrected them right away instead of trying to roll with it. Get yourself back into the mindset. The fact that I didn't pay attention took me out of my mindset. Now I'm back in. And if indeed we get down and say it dips below 695, I may want to start putting a stop in because I don't want to give any more money back. And the NASDAQ can move very, very quickly. So see, it's holding right there. It's holding 95. It's holding that low for whatever reason. But price action is telling you, for whatever reason, 695 is holding. Will it be enough to force it higher? Should I be like having my stop at break even +2? As it got down there, that would have been a good choice. So again, you want to keep your mind clear and focused so that you can make these decisions without emotion. You're just trading. And you need to be able to trade without emotion. When emotion comes into our trading, recipe for a disaster. Now, the fact that this is kind of not getting far isn't so bad, but I am going to go ahead and put my stop right there at 01. And I should see, they keep trying to get it back above 95. So I'm not really sure I want to do that just yet. But I might, yeah. Up and I'm out. And then make sure that you close your other orders. And you can't get upset with yourself if it goes down to hit your target, which it just did. Because it still was a good trade. Now, just by following your rules and setting your trade up and following through and understanding that, oops, I just could derail myself because I forgot to put my order quantity back down to 1. I just sold 3. I don't want to be short 3. So what's the resolution? You're in a profit, take 2 off, get it back down to the 1. Now, here we are. And now we're going to make a decision. Now we're following the market and your focus can stay. Now you're over checking your 5-minute. How much more do we have? This is kind of telling me we should bounce a little bit, but that's a 1-minute chart. Your 2 minutes getting there, your 5 minutes not there yet. But what the 5 minutes kind of telling me that it's broken below these moving averages. So our next stop may be, if it doesn't hold this little support level, which it's trying to right now, the next stop will be the point of control, which is this brownish dotted line. What is the point of control? The point of control is where the market at this moment, most of the volume is trading. I like to call the point of control a comfort zone. That's where buyers and sellers meet and are able to find value to trade. So how I've got my chart set up, just so that you see this. Let's open this guy up a little. Oh, nope, on this one. Just so that we can see it. Okay, point of control. That's where most of the volume during this sequence has taken place. The value area is 11,582.25 up to 11,783.25. That's pretty big. That's a 200-point value area, and we saw it in action. Down and back up. What did it do? It went down to the bottom of the value area, and then it went back up to the top of the value area, and now it's down in between. Likely going to head towards that point of control, which is that comfort area. That's where it'll trade around freely, and you can see it right here. Traded down, came back, traded up, came back, traded down. Then, you know, there were way more buyers than sellers at that moment, and the buyers just pushed it up to the value area high. So they stayed within the value area where there are buyers and sellers that are willing to meet. When value changes and the value area changes, it's because one side is overtaking the other. If we come down and we break below this level and keep going, it's the sellers have overtaken the buyers, and the sellers are looking for value. Where can they sell this? Where can they fill these contracts? So that's what they're going to hunt for. And then we can go out on longer term charts and start to see, well, we can determine that where we have support. And that support's going to be around a value area. So there are different methodologies. Now, if you can't keep yourself in a mindset and focus and you're being derailed here and there, like for example, if you really felt, and I'll tell you how difficult it was, I really was trying to put on a trade that would go sincerely, strongly against me so that I can demonstrate the point. But because I've worked so long on my own trade plan, my goals and my rules, and plus I keep very close tabs on my sensations, my emotions, and my thoughts, that I have now been doing that long enough that if I really drop into where I'm being derailed, it's just, I know better. Close the dang trade. You will really hurt yourself if you don't, Michael. Close the trade. So, but it takes a while to get to that point. And there are times when I don't, and then I hit my daily limit and and it shuts itself down. And then I'm like, okay, well, why did you do that? But and if I go back, I will realize there came a point where in my mind, it derailed my thought process. Because me personally, folks, again, I'm going to be a little vulnerable here. I do not like being wrong. And whether that's wrong on a trade or just wrong on an answer or whatever it is, I don't like being wrong. And quite frankly, it's taken me a long time because I'm a trader. I have so many years of experience and market experience that when I chose to really become a day trader and to be trading from home versus trading on a trading floor, it changes the whole mechanism of how one trades. Because and I was an options market maker on several exchanges around the globe, and just here, and primarily here in San Francisco, that when you're standing on a trading floor, all of your inputs coming from right around you. When the floors went electronic, and so there was no more need to stand in a pit, and the pits left and went to their homes or their offices, boy, did we lose a lot. Then we all became retail. And what I mean by that is, like, we're all retail traders now. Some of them are connected to high frequency trading computers, and those are algorithmic, so they just go by themselves. But those of us that are sitting behind with a mouse and a keyboard, we are retail. So we're not the first to get the news anymore. We're lucky if we can see it somewhere so we can catch these moves. Or why is the move happening? And now I want to take you to that next step of what my mindset really battles against letting in. When you see a move, like here we have all this downside, walking in today, it was pretty clear that, the whole Snapchat thing yesterday, how it's affecting Facebook and Google and Amazon and other, first of all, other social media and other advertisers. How is it affecting them? Not very well, because they might be in the same boat coming up as Snapchat is. Maybe we'll be hearing from Google that their ad revenue is going to really be challenged. Who knows? But here's what I don't want to do. I don't want to stay in between on a trade and wonder. I'll answer that question right in a second, Danny, because it's a really great question. Because what I try not to be, I don't care about being bullish or being bearish. I don't try to look at a move as a bullish move or a bearish move. I just would prefer that the market does both and does it in copious amounts, because that's going to provide volatile moves that I can participate in. So I'm not looking to buy and hold. I'm not looking to sell and hold. So as a day trader, a long-term trade for me is 5 minutes. So it's the mindset. And when I can put that mindset together, it's totally beneficial to me. So what I try to do and what I try to teach is we cannot care about why the market's going up, why the market's going down, who's pushing it, what reason are they pushing it, when do they decide to push it more, why, who, where, when, or how. It really makes no difference, because while you're doing that and while you're trying to figure it out, you're missing a ton of entries. You're missing a ton of trades. So if you've made a decision that you want to be a day trader and you've made a decision you want to day trade the futures markets, it isn't necessary to be bullish or bearish. It's very necessary to understand price action and trade the price action. Price action is going to tell you exactly what the market's going to do and where it's going. And when you can start to relate that price action to moving averages, points of control, value areas, and then again, if I'm using some of my other bigger charts, you have Fibonacci, resistance, and support. I have an Elliott wave count, and I know how to follow all of them. So I can kind of get an idea of what I can expect, but I'm not going to sit on my laurels and say it has to do that. Anybody who's been in the market long enough knows the market doesn't have to do anything. The market will do what it sees fit. The market is thousands of traders spread out across the United States and the rest of the world. And they're all watching and they're all trading. And there's a myriad of reasons why someone might be buying copious amounts of the NASDAQ future or of Amazon or of Apple or of any of the components. There's a myriad of reasons why they'll be selling. So we have all these different traders who kind of come in, and we're all in the same arena, but with different reasons. So you'll see sometimes where stocks like Apple will suddenly just go against the grain. Like right now, it's not, but it'll go against the grain and rally. So when we're looking at, well, what could cause Apple to go up? It's just, personally, me, I can't care, but I can show some of it because I'm an ex-market maker and tell you, well, what happens? Here I am, I'm looking at these expire on Friday, these options. But you can see strike prices. You can see when they're, and as an options trader, what option traders attempt to do, or most of them attempt to do, and there are high frequency trading firms that their algorithms are scouring all of these markets, these option markets, and they're looking for pricing inefficiency. They're looking for premium. So if you're seeing a market that's just like right now, it's just working its way lower, it is likely because the premium has shifted over to where you sell the underlying. And that, what's the corresponding? What's the hedge? You sell a put, you sell the stock. You sell a call that has too much premium and you buy the stock. So again, is that saying one stock's bullish or not? No, it's just kind of saying this can produce trades where they come in and they buy it, and buy it, and buy it, and buy it, and buy it. Friday, folks, Friday, last Friday, perfect example. Apple, you can see, has strike prices every dollar. Now they came up with this brilliant idea to try to stop and slow volatility. because they used to be, the strike prices were $5 or like $2.50 apart. And that was producing too much volatility. So they decided, well, we'll try to do it every dollar. Well, that just adds a lot more trading, volume to the options and money to the options exchanges and all the clearinghouses. But when a market like last Friday, they were rallying at around 140. And then they started to sell it, and they sold it down to 132. And this is on the day that these options are expiring. So they went through 140, 39, 38, 37, 36, 35, 34, 33, and down to 132. They got all the way down there. That's eight levels, eight strike prices. And then in the last 30 minutes, they took it from 133 back to 137. That's a lot of adjustment. Instead of going like, oh my God, look, we're bullish, they're just jumping back in. It's like, understand why. And if you have to take that moment because you want to make that decision that you want to be bullish, don't. Keep an open mind and just does it. Okay. Now I'm going to answer some of these questions because these are important questions. Danny asked, is like, why would I care if I was wrong or not? He knows it's hard to do, but it makes sense. You want to not care if you're wrong or not. You want to be able to just recognize it and move on. But it is hard to do. And it's hard to do because, like for me, I don't like being wrong. But that's an emotional response that comes from way back. Now, what I got to do is block it out so that if I am, I can get out of the dang trade. And let me just show you, let me just tell you, you can get out of a trade. And if it's moving in an opposite direction, what you thought, you get out, you reassess it, and your next action might be to go join the party. Because right now, the volatility is high enough in the futures, in the options, everywhere across the board. We've got enough volatility that if you take a $100 or $200 hit, maybe even a $300 hit, the volatility is strong enough that you should be able to make that back, plus get back up to your goal. It's when we don't, and we just stew and sit in our disjointed efforts, that it becomes an insurmountable problem. And then we just surrender to the problem. Oh, who cares? Damn it. Blow the damn account out. Your negative will have won. And so we're trying to prevent that. And how do we do that? We keep a strong mindset. Now, the mindset is going to help you to try to block out noise. Now, we've already started that mindset, and that noise might be coming from within our own brain. So how do I stop that? Let me just answer a question, and then we'll focus on that. So, and then Matt's asking, does being bias agnostic, focused on price action only, include not paying attention to pre-market news? Is information outside of price just noise or useful context, i.e. bias creating? That's really a great question, Matt. And the only way I can answer that is like, no, I think we would be foolish not to pay attention to pre-market news. What we try not to do is to then act on the news versus the price action. So if we can just stay focused on the price action, whatever happens pre-market news, or even market news that comes out once we're open, then we're reacting to the price action. So it's going to trigger us via a signal. So now you're following your rules, you're following your trade plan, and you're focusing on the price action and not on the news itself. So when we're in it and we get the news and the market starts to react, there are times when suddenly someone will interject, oh, wow, have you seen this? Did you see? Look at what they're doing in the bonds. And it's like, well, actually, I don't care what they're doing in the bonds. because my focus is on what's in front of me. And whatever they're doing in the bonds is a reaction to what's happening in front of me. Whatever the reaction that you're going to get will be reflected in the price action of the product you're trading. And if your product that you're trading is interest rates, and you're in trading the bonds, and you're likely wondering, wow, geez, look at those bonds are up too. There's got to be opportunities over there. Why are the bonds up? And that is where you're getting derailed. Because I could tell you a whole bunch of reasons why the bonds are likely higher today, none of which may make any sense or make any difference to what happens tomorrow or what might happen later this afternoon. Unfortunately, guys, I'm not watching the clock and I have to stop. So I'm going to just leave these last 2 minutes. If anybody else has a question, I'm sorry, I didn't really get to do everything I want. But that's the nature of having to squeeze everything into 55 minutes. So I want to honor my commitment to stop on time so the next person can come in. I will, if somebody has a question, we'll say, go ahead and ask real quick. Thank you, Matt. Thank you very much. If you do have a question, and I'm sure David might just throw this up so that you all can have it, feel free to email me. And my email, I'll even put it right here in the box, guys, so you can put it in. Yeah, oops. Send me an email. I'm more than happy to. I always answer my emails. I will provide an answer. Also, what I have inside there, folks, is I do have a trade room, and I also provide coaching. And on both of them, they're really facilitators for my teaching. And I am at a point in my life where I really love teaching other people how to get themselves to their own level that they want to be at in trading, help them meet their goals in trading. Sometimes it's helping them develop those goals, helping them manage those goals, helping to build a mindset, helping to put the whole package together so that when you step into this market, it's not me against the market. It's just you and your trading, and you've got a plan and you've got it all worked out. Boom. And then be able to take the smack, take the hit, take whatever it is that the market wants to pass out to you. But I am going to go ahead and pass this back over to David. And thank you all. Thank you for hanging out with me and allowing me to talk a little bit. I hope it was beneficial.